My name is Siboniso Nxumalo. I'm a portfolio manager at the Old Mutual Investment Group. This is our quarterly investment review for the fourth quarter of 2022, and we're going to look back at the year of 2022. What a year! 2022, we saw the end of COVID, with the world reopening and gradually economies returning to normal. We also saw turmoil in British politics. We saw the shortest serving Prime Minister in Liz Truss. We saw the second shortest Chancellor of the Exchequer in Kwasi Kwarteng, and that was tumultuous for the markets. We saw war in Europe, something we hadn't seen in decades. Russia invaded Ukraine. And as a result of that, we saw the return of inflation, especially in the developed world. Inflation rates were higher than they've been in probably 4 decades. With that, then, we saw the fastest pace of interest rate hikes. We're going to talk about that a little bit later and the consequence of that. And with easy money fading and interest rates going up, we saw bubbles bursting. We saw crypto collapsing, we saw SPACs collapsing, we saw MFTs collapsing, and we saw growth stocks, which were mostly tech stocks. Actually, they came down quite a lot. In South Africa, we saw the return of load shedding and sitting in the dark. And then we also, near the end of the year, saw a lot of political uncertainty and noise in South Africa with investigations on the president's affairs as we headed towards the ANC's elective conference. What a year that was. Now, when we look back as an investment team, our job is to grow clients' wealth over the long term. And here at the Old Mutual Investment Group Macro Solutions team, we approach investing in 2 dimensions. We call them theme and price. And twice a year, the entire team stops whatever they're doing and they spend time researching what the long-term structural themes that will drive investment markets going forward. There are 2 themes that I'm going to mention. Global wave down and rotation are the themes that we're going to pay attention to. So in 2022, we saw an inflation and a growth shock. So we saw lots of inflation, we saw growth starting to slow. We believe in 2023, according to our research, we are going to see growth continue to slow in global markets, and we're going to see company earnings and company profitability come under immense pressure. We always see this when interest rates rise at the pace that they've risen over the last year. And so therefore, how do you invest in that environment? Well, we see opportunities in global bonds over global equities. That already indicates caution. We are seeing defensively orientated shares that are stable and able to weather tough times over cyclical shares. So therefore, we've taken a cautious stance in terms of our portfolios, positioned a lot more defensively than we were in 2022. We also see a rotation. What does a rotation mean? Well, peak inflation, we see inflation peaking, we see interest rates peaking, and therefore we think the US dollar, which has driven quite a lot of markets over the last few years, we see that peaking too. And we think that with that, we're going to see a weaker dollar, and therefore the opportunities in a weaker dollar are going to lie in what we call value shares or the cheaper shares. And again, we've positioned our portfolios in that sense. We've got a high tilt towards South Africa. We're finding great opportunities in South Africa still, and obviously in the more value-orientated rather than growth-orientated shares. Now, let's talk about investment performance. Over last year, we saw returns across the broad asset class as rather low. South African equities and South African bonds delivered similar returns of just over 4%, while cash returned a little over 5%. Global assets were the big losers in the year. We saw global equities down over 12% and global bonds down 11% lower in South African rand terms. The rand was 6.6% weaker against the dollar, meaning that returns were worse in US dollar terms. So last year was a bad year to go offshore because of this investment performance. Now, within South African equities, we saw that diversified and industrial metal miners, British American Tobacco, which is a defensive share, and banks performing well. We own lots of banks, we own lots of British American Tobacco. While we saw MTN losing nearly a quarter of its value. Volatility prevailed last year. Naspers and Prosus recovered from being down nearly 50% in May to end the year 5% higher on a combined basis. On the other hand, Sasol was nearly 70% higher in the second quarter, driven by higher oil prices, but ended the year just shy of 9%. And therefore, given all this volatility, how did we perform? If we look at our funds over the last quarter, Old Mutual Moderate Balance Fund, Old Mutual Gold Fund, and Old Mutual Quoted Property Fund were top quartile. Pleasing returns, beating the market and beating the peer group. But we saw Old Mutual Investors Fund also beating the peer group, second quartile performance. But we saw our balanced fund, our flexible fund, they were third quartile, slightly underperforming the peer group because of their more defensively oriented stance and the tilt towards South Africa. And over the year, we saw Old Mutual Stable Growth and Moderate Balance Fund then be first quartile funds, and we saw Investors Fund and the Max Return funds being second quartile. So all of those funds above benchmark and above peers. Pleasing returns. The rest of our funds, we saw them in the third quartile, so there's work for us to do. 2022 was a volatile, tough, and complicated investment market. 2023, global growth will slow. Company profitability will slow, with a very high recession risk in the US, which is the biggest market in the world. Now, 74% of the time that the US has gone into recession, so has South Africa. With that in mind, we have cautiously positioned clients' portfolios in order to preserve and to grow capital over the long term. At the Old Mutual Investment Group, we have a very capable, experienced team that does rigorous research, various asset classes, various markets, and that team is a safe pair of hands that you can trust your capital to help you navigate 2023. Thank you. I'll see you after the first quarter.